As far as investment property is concerned, it is covered in International Accounting Standard 40. An investment property is property which is either land or building or part of building or both, land and building, which is held by an entity to earn rentals or for capital appreciation or both. Investment property does not include the property which is held for use in production or supply of goods or services or for administrative purposes. And this type of property is in fact covered in International Accounting Standard 16 under property, plant and equipment. Similarly, investment property also does not include the property which is held for sale in the ordinary course of business, and this type of property is covered in International Accounting Standard 2 under inventories. As far as recognition of investment property is concerned, investment property is recognized as an asset only when it is probable that future economic benefits associated with this property will flow to the entity, and the cost of investment property can be measured reliably. At the time of initial measurement, investment property is measured initially at cost, and the cost of investment property includes its purchase price and any directly attributable expenditure. Examples of directly attributable expenditures are professional fees for legal services, any property transfer tax, and any other transaction cost. After initial measurement, investment property can be subsequently measured using two models, either a fair value model or a cost model. And whichever model an entity opts to use for its investment property, it has to apply the same model for all the investment property. As far as fair value model is concerned, in this model, investment property is revalued at the date of financial statements at their fair value. And any gain or loss that may arise from change in the fair value of investment property from one date of financial statement to the other date of financial statement is recognized in profit or loss account for the period in which that gain or loss has arisen. Another thing about the fair value model is that in this model the investment property is not depreciated. On the other hand, in cost model, investment property is reported at cost less any accumulated depreciation on the non-land element and any accumulated impairment loss.